Michael, you said one thing. If it's a scam, you said if it's a scam, it's either going to zero or a million. I think this is one concern that people have. They're like, if it's going to a million, obviously it's a great asset to invest in. But the risk of going to zero is one thing holding those people back. But you said only if it's a scam, it will go to zero. It'll be regulated out of existence. What about the possibility that it's enough of a threat that governments will regulate, centralize it, crush it, as they did to gold, or just over-regulate it out of existence and then replace it with CBDCs?
Yeah, well, gold may be regulated, but it's also worth like $15 trillion, and Bitcoin is worth $1.3 trillion. So if we end up with the failure of gold, Bitcoin 10x's from here. So in terms of being regulated, it is regulated, right? The IRS regulated in 2014 by saying it's property, you have to pay tax on it when you sell it. And it's regulated via these ETFs. So if you're an institution and by charter you have to own securities via a regulated custodian or via a regulated bank, you're buying FBTC or you're buying IBIT. Just like the SEC just approved options trading, but only on IBIT. So there are regulations. The regulations solve the issue of custody. They solve the issue of compliance. And that's why these spot Bitcoin ETFs are the most successful ETFs in the history of Wall Street, right? Billions of dollars is stampeding into those instruments. Oftentimes what's going on is the regulated instruments, like IBIT is one, but so is MSTR. They're basically regulated securities trading on high volume stock exchanges in the United States. There's a lot of liquidity, a lot of traditional capital that can trade those instruments. That's why they buy them, sell them, and trade them. And so yeah, no one's saying it's not going to be regulated. In fact, it's the opposite, which is as it's regulated, it's the green light for traditional money and institutional money to enter the asset class.
Just a little follow-up.
What about this before James? Before you follow up, James, one last quick comment, Michael, and then I'll give it over to James. What about the other risk of governments starting to see it as big enough of a threat that they work to crushing it?
Well, I mean, that was the question people had in 2013. I mean, in fact, I thought that in 2013. I tweeted about it. If the government was going to crush it, like the IRS, doesn't designate stolen property or counterfeit money as property, right? If you were counterfeiting stuff, the IRS wouldn't give you a designation of property. So we lurched towards something clearly being legitimized in 2014, and then between 2014 and 2020. It was a question mark, but then in 2018 or so, you started seeing options on CME trading on Bitcoin, if you recall. And so that was another endorsement. And then when Fidelity entered with Fidelity Digital Assets, that was a third endorsement. When dozens and dozens of public companies started buying Bitcoin and were approved by the SEC to buy the Bitcoin and list, that was a fourth endorsement. Then when you actually saw the last administration, you saw positive speeches and characterization of Bitcoin as a digital asset. In fact, Gary Gensler, Jerome Powell, Christine Lagarde, and Janet Yellen all acknowledged it to be a legitimate digital asset. They said Satoshi created something innovative and real. And by the way, they classified it as a speculative asset, but not as a currency. The real uncertainty around Bitcoin has been around its use as a digital currency, not as digital capital, right? If you're holding something and you want to do 10,000 transactions without any AML KYC at any size, now you're crossing over banking regulations and currency regulations, right? And that's highly controversial. But what's not controversial is whether institutions and individuals and corporations in the Western world can own property. So it's been acknowledged, like Berkshire Hathaway can own billions of dollars of Apple stock, right? Warren Buffett's not going to wire $1 billion of Apple stock to Africa without acknowledging that transaction publicly. So the use of Apple stock as currency would be controversial, but the use of Apple stock as property or capital, not so controversial. And so when you think of Bitcoin as, I own a building, right? Am I allowed to own a building? Well, the truth is you can own a building in China as well as in the United States or Europe. You know where you can't own a building? Cuba or North Korea. So where it's illegal to own property, then Bitcoin is in a regulatory gray zone for sure. But where it's legal to own property,
Yep.
you're going to be able to own it. And I think we've crossed that chasm between 2020 and 2024. It's quite obvious, right? If BlackRock is handling the asset, if there's 100 public companies handling the asset, if the SEC is approving options trading on the asset, and if the CME trades commodity options approved by the CFTC, it's pretty obvious that the asset has been adopted and is supported by the regulators. So I think we're past that question.
Just to kind of thanks, Michael, just to kind of double down a little bit on what Mario said, and notwithstanding this would probably increase the price of Bitcoin. The metaphor, when he talked about a possible CBDC, if you think about the Great Depression in 1929, people started running for gold a little bit like now. Cohn Loeb and JP Morgan, maybe the BlackRock and State Street of the time started accumulating gold, and they allowed gold to go up in price, the regulators did. And then there was a swap, essentially, where gold was banned, but you were able to exchange it for paper money. And a lot of conversations, and I think this is where Mario was going on the CBDC, is that the accumulation of Bitcoin by major banks right now, BlackRock, being the great example, will eventually get to be where the majority of Bitcoin is going to be controlled by a lot of these large institutions or compliant institutions like, I would say, Coinbase and Kraken and, maybe MicroStrategies. And so if the government ever thought that, hey, this is a, currency of terrorism or uncontrolled or unregulated from a standpoint of, secrecy, and they wanted to ban it in the United States, as we've learned since Rome, the key backing of any currency is the largest military in the world. And so if one day they said, hey, BlackRock, we want you to swap for CBDC, this would probably be after a 20x for BlackRock. But ultimately, the question is, as they take custody, could there be a swap similar to 1933?
Yeah, sometimes people think that, but what they're missing is in 1933, the US dollar was pegged to gold, right? It was $20 per ounce. And so the US dollar is not pegged to commercial real estate in New York City. And the US dollar is not pegged to Apple stock. And the US dollar is not pegged to Bitcoin. And the US dollar is not pegged to the value of your sports team. So if the US dollar was pegged to something, then of course it becomes very political. And what happened after that act was the US devalued the dollar from $20 to an ounce to $34 to an ounce. So that was all about getting off the gold standard. Right? There is no Bitcoin standard. So the time for you to worry is 50 years from now, when all the money in the world is Bitcoin, when Bitcoin is 450 trillion and it's worth, go figure, $50 million a coin. And then the currency of the country you live in is backed by Bitcoin. Then you might see that what'll happen? The more likely thing is that currency, the whatever yo-yo dollar, will be pegged to Bitcoin, and then someone will take over the government and said, hey, we're going off the Bitcoin standard. But they're not going to get rid of Bitcoin. But if you do that, if you go to Bitcoin treasuries, you'll see that 95% of the Bitcoin isn't in these ETFs. 20 for every dollar of Bitcoin in the ETF, $19 is not in the ETF. So Bitcoin is already a global asset outside the control of any nation state or any company or any actor. And that's what makes it so special. And if you think of it as property, it's no more risky for a New Yorker to buy $100 million of Bitcoin than it is for a New Yorker to buy $100 million worth of warehouse space in Manhattan. Right? No one walks around New York saying, oh my God, the government's going to seize my warehouse space because they want to devalue the dollar. You're like, well, are you kidding? The government isn't backing the dollar on warehouse space in Manhattan. So it's just a piece of property that you're holding for long-term capital preservation. And where you're going to get yourself in trouble is if you don't pay taxes on your warehouse space in New York City, or if you want to transfer $100 million worth of Apple stock to somebody in Africa and you don't want to talk about who you sent it to, right? Right. But those are problems that people that have $900 trillion worth of assets have today already. We're not going to change the politics or the geopolitics of the world here. What we're doing is giving people a better investment than Google. That's the point.
Yeah, I get it.
Michael, let me ask you a question. You'll probably like it less than the previous questions, to be honest. And something that James touched on very briefly. For the audience that's already convinced of Bitcoin and crypto in general, I want to ask about ETH. But before doing that, I want to go to something that James mentioned, and that's meme coins sucking up a lot of that liquidity away from potentially Bitcoin, Ethereum, and assets that many investors see that they feel like they've missed out on. I want to get your take on two things. First, the impact meme coins have had on Bitcoin and crypto in general, from an optics perspective, and from a perspective of sucking out liquidity. And number two, your thoughts on Ethereum. I know you have concerns with how Ethereum keeps changing and the current state of Ethereum as well, but you've also called it, got to hear my notes, you've called Bitcoin the digital property, and you've called ETH digital application. So can you elaborate a bit more on why, or if ETH will ever be or could potentially be on MicroStrategy's balance sheet?
Bitcoin's the crypto asset that has unambiguous regulatory clarity and global consensus everywhere in the world as a commodity, as an asset, and it has the most certainty, not just in the crypto universe, right? In the financial universe. If you're looking out 100 years and you're buying Bitcoin, you want to buy 1/21 millionth of all the money on the network. And you want people to acknowledge that, oh, I just bought this because I want to hold one block out of 21 million blocks at Manhattan in cyberspace. And so think of Bitcoin as Manhattan in cyberspace. There's a lot of other places you can live. There's a lot of other cities than Manhattan. And there's a lot of other businesses. I don't think that the liquidity or the capital that's being invested in meme coins is going to either drive the Bitcoin bull run or it's threatening. It's kind of like, is Manhattan threatened by what goes on in Vegas? Not really. I mean, there are different things going on. And I think with regard to all the other crypto use cases, right? Whether it's a DeFi network or a digital currency network or a meme coin or an NFT or whatever, all those things, they're different applications. They meet the needs of different investors. They have different regulatory issues. Last week, MicroStrategy raised, $1 billion in a convertible bond issue. We put not quite half of it into Bitcoin. And then the week before, we raised more than $1 billion in equity we sold in the capital markets. And BlackRock has basically raised 20 billion plus and put it into Bitcoin via IBIT. That money is flowing from people with hundreds of trillions of dollars, and they're making the decision to buy some Bitcoin-backed instrument or own a bond or own a building or own a portfolio of Magnificent Seven stocks. And so the thing that's going to drive Bitcoin is going to be traditional money held by institutions, high net worth individuals, and corporations. When Google has billions of dollars a month and they either buy some bonds or they buy their stock back or they buy Bitcoin, right? They're just looking for capital preservation. So Bitcoin's very straightforward. These other things, right? They have their own thing, right? I will acknowledge people like all these other things, right? And they're all interesting. And let's say gambling. People like to gamble. And if you gamble on an Indian reservation or you gamble in Vegas, maybe you make a lot of money and have a lot of fun. But if you do online gambling, it did get banned and some guys got arrested for it because they crossed, a bright line. And so sometimes, some places you're allowed to do it, other places you're not allowed to do it. It would take a lot more than a few minutes to cover all the nuances of it. I think that you have to think very carefully about what kind of investor are you and what kind of investment are you making.
Yep. Hey,
And you've just on the ETH, on the ETH, I'm sorry,
go ahead.
James, just on the ETH question as well.
Yeah.
I've asked pretty directly whether your MicroStrategy could ever have ETH on your balance sheet. And again, I want to reference another quote that you've used to describe ETH. You said ETH is more akin to a platform trying to dematerialize the JP Morgan building and the banking establishment. And you've called Bitcoin as the foundational granite block for that building.
Yeah, right now what's clear is that there's regulatory support for public companies and institutions to hold Bitcoin. There isn't regulatory support or consensus for public companies or institutions to hold ETH. And that's above my pay grade. I don't make the rules. That's just what it is. But generally, it's well understood that if you have a public company and it's not listed, say, in the United States, you can't move the listing to the United States and get approval from the regulators to trade unless you're holding Bitcoin only. So the safe choice for a publicly traded company or for a large institutional investor is Bitcoin. I think all the other crypto assets fall into a gray zone, and there's a lot of questions to be answered about who can handle them and what their future is. And I don't really know the future.
If you do get regulatory clarity and from a regulatory perspective, you can hold ETH, would you consider, is it an asset class you would consider in its current state? And last question before James.
Yeah, that's a really big if, but MicroStrategy wouldn't, because MicroStrategy is 150% Bitcoin. So I leave these other things. Look, they're gold miners and they do gold, and there are some people that do platinum and some people do palladium. We do Bitcoin, right? We're 150% Bitcoin. We're going to be Bitcoin. And the only thing I like more than Bitcoin is more Bitcoin.
That's a great answer, Michael. Hey, when we were in Nashville at the biggest Bitcoin conference in the world, both RFK and Trump, I don't know if it was hype. I'd love to hear your opinion on it. But they talked about the U.S. government accumulating Bitcoin, outside of regulatory seizures. One, do you take that seriously? And two, what would the effect to, our national debt, the state of our, budget? Have you thought about that at all since those announcements?
Well, I think what's clear here is the Overton window is shifting. 4 years ago, the question was, is the government going to ban Bitcoin? And 4 years go by, and now the discussion is, how much Bitcoin should the government own and should they buy more, right? That's a major shift, right, for people that are paying attention. I'll note, right, what Senator Lummis said is we should accumulate a strategic Bitcoin reserve. What RFK said is I think we should acquire 4 million Bitcoin. And what Trump said was, we will not sell our Bitcoin. Okay, so if you look at the United States and say, what is it the United States won't sell? They won't sell their national parks. They won't sell their nuclear stockpiles. And they won't sell their Bitcoin. They would sell everything else. If they seized $1 billion of Apple stock or Microsoft or your building or your sports team or your Picassos or your Leonardo da Vinci's or your diamonds or your silver or your gold, they'd sell it. But you do not sell your Bitcoin. Why is that? Because Bitcoin is the most scarce, desirable property in the universe, right? It's global capital. And if you want it, why wouldn't you do it? Because it's the best thing to own forever. But why else wouldn't you do it? Because if people do stop using bonds or sovereign debt as a long-term treasury asset, what's the next best thing they're going to go to? Well, the logical next thing to go to is Bitcoin. And so the competitor to holding bonds as the global capital asset is Bitcoin. So the smartest thing you could do to support the US dollar is simply buy 20% of the thing that everybody might one day switch to before they get there. It's kind of like the US buying Louisiana territory or buying Alaska, or just, if you have Virginia and the Eastern colonies, you might as well get the rest of the nation, because if people go west, wouldn't you want to own the place they're going to go to? I mean, that was generally the idea, so Bitcoin represents the next financial frontier. You ought to buy it because it's a smart investment, but you should also just buy it because if people lose faith in all your other instruments, that's where they're going to go. And you might as well be there and put your flag there before they get there, because that way you win no matter what happens.
Hey, before we
How
move
cool,
forward, I'd
following
love
up
to
on,
pivot.
oh, go ahead, James.
Yeah.
Go ahead,
Well, I was
James.
going to pivot to strategies.
Before you pivot, actually, before you pivot, then following up to James's question is how much does it matter on who will be president on November 5th to Bitcoin's price in the short term?
I think Bitcoin's going to be a beneficiary of whatever happens November 5th, because after November 5th, there'll be more regulatory clarity about what happens next. And I think the results range from good to great, right? I think that there's a lot of other questions that'll be decided November 5th where there are good and bad outcomes, but because it's a very complicated situation. But I think with Bitcoin, time is on our side. I think that Bitcoin is again, it's a new digital capital asset. And after November 5th, we'll have clarity about it. So I think Bitcoin is going to be a winner no matter what. And if you were asking me for a good investment idea that benefits in the fourth quarter, I think Bitcoin is a beneficiary in the fourth quarter no matter what happens.